Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the market sniper, Francis Hutt. He is the macro technical analyst and the founder of the marketsniper.com. Welcome, sir.
Very glad to be with. Thanks for the invite.
So people, Francis, they're comparing now to 2008 financial crisis. Was the 2008 great financial crisis just Lehman alone, or was it a buildup of many factors?
So, yeah, there's a couple of fragments in that question that I'll break out. So it wasn't just Lehman alone. Lehman was a single bank. In fact, the Fed made, and George Bush, I think it was, but his handlers behind him, the Goldman Sachs team that were backing him up on things he never understood, he decided to let the one go. And then they said, whoops, this is a daisy chain that will run right the way through them. And then they bailed out the rest. Including AIG, there was the dumb holding the bad portfolio that everybody laid off and hedged and insured with. So by holding up AIG, they made all the major banks whole. But it was never just a Lehman event. It was an entire run-up all the way through. That it was the reheats, it was the cutting of rates after the dot-com boom that actually created a different asset price bubble, because people weren't yet ready to wade into internet stocks again. And as a result, you went there. But this isn't part of your question, but it's as important. The comparable of 2008 to today is where I differ, because many people are associative of thinking. They want to compare where are we now relative to something else. There is no other point in time relative to where we are today, because everything is further, darker, bigger, and heavier. In fact, all the events, if you take the dot-com boom, and all the subsequent crises have got bigger in scale, and the responses have got bigger in scale. And as a macro technical analyst, that's almost a megaphone. Each pump is leading to a bigger dump. And this is why the scale of what I assess is going to come is literally going to be a system down moment now. So I'm actually calling reset literally this year going into next year. And the riots, the whole shutdown, problem, reaction, solution, it's all coming. So people that are saying, well, I'll wait till I see signs before I get gold, get silver, you're going to get caught with your pants down.
Yeah, I could totally see that happening. Once the fear really starts, it's too late. Retail's already cleaned out of inventory at that point. Or as Willem Middelkoop likes to say, if you got to be in it to win it, because once it happens, it's too late. It's gone. And a lot of our audience were deeply invested in silver and to a lesser extent gold. So you already know that we're Wall Street Silver. But back to what you were saying, how this is bigger than 2008. I totally get that. It just seems like things are falling apart at this point. We're seeing riots everywhere. We've been tweeting about this. Ecuador, Ghana, in the Netherlands right now, all the farmers are freaking out over these new rules over nitrogen. They're trying to shut down farms. We're on the verge of a food crisis globally, and they're trying to shut down farms in the Netherlands over some climate goals that some technocrat has. And
what we call climate change, the watermelon communism. It's red inside. They put a green skin on the outside, though. It's pure watermelon communism. And we've heard the news in the States, the amount of unlucky food chain supply fires. So, we can get very reset on this. It seems that there's machinations that seem to be working against us on supply chain. And some of them are too coincidental, and there's too much of a pattern to put it all down to chance.
It almost seems like the powers that be in Europe and the United States are intent on forcing this to happen. It seems like it's not like this is just, they're making bad decisions. They seem like they're intent on forcing things to break down. Is that to bring in a central bank digital currency intentionally? Is that the ultimate end goal, that they can only get something like that passed if they make things bad enough?
It's my view, yes. In other words, you can't parallel run two systems forever. We've already had crypto that is the beginning of digitization, training various people, libertarians. Start with your biggest problem first. If you're a government overreaching totalitarian government, get them bought in, the rest will follow. And that's already going. We already have a crypto system that is running next to a failing banking system. If you've ever tried to move money around in the banking system, particularly internationally now, I mean, it's become, I actually spoke to a gold vendor and he said banks are paid, or they are, the staff gain credence for holding capital in the bank and restricting movements of capital. He actually said it's a good one. If someone's trying to move 100,000 out the bank, obstructiveness is actually part of the modus operandi now. How do you slow them down, prevent something? Someone had a transfer, an exchange, as they call it here, and the bank didn't move the money and then asked 101 questions, even though it told him there was a property purchase, and he actually lost the purchase because he was unable to deliver the funds in time. And that was inadvertently a win for the banking. So they're not enabling business. They are doing everything to cover their backside and more to disable your excessive movement of funds.
You know, I've heard reports like that where banks are just asking an amazing number of questions. Like people try to take out, you know, $10,000 or $15,000 out of an account, and you have to answer 20 questions about what you're going to use your own money for. I mean, I've seen I mean, I don't know how true this is, but I've seen it on Reddit and Twitter, people making these complaints. Any significant withdrawals, you're getting a third degree. And it's sort of, you know, it's like, hey, mind your own business. I'll do whatever I want with my money, right? It's
well, they don't view it as your money. That's the problem. They view it as part of their balance sheet. And more they're under threat on that front. It's not my view that commercial banking survives long run. I mean, when I say commercial, banking for retail in a business sense, commercially, retail banking, I don't see it surviving. In other words, the central banks will go straight to source. And it's part of getting you to recognize the ultimate power as well. You're going to be submitting to them because they will also real-time tax you. They will real-time inflate you if there's an economic downturn, and actually skim from banks' accounts if they think there's too much inflation right now and you're doing too much spending. In other words, they will never admit that the central banking policies are inherently inflationary always, regardless of what they say about a little bit of inflation, no inflation.
It's they will make every excuse, and you're seeing that right now. It's whether it's Putin's fault. Oh, it's the consumer's fault. Oh, I've seen ridiculous articles lately. Oh, consumers are just too grumpy, and that's why. I mean, I literally, these are headlines I've seen.
That was Yellen. Yeah.
It's all in your head. Or there was one yesterday on Yahoo Finance that was about, if we would all just believe in more globalism, we could get inflation back down to 2%. It's like, it's the narratives that the media keeps trying to push.
Inversion, deception, and the biggest lie is the game in terms of these forces. And all mainstream media is co-opted into this. It causes ultimate confusion in people and leaves them as deer in headlight. Turn their noise and deception off, understand true principle and sound money, and do what needs to be done to secure it in a time, because the game is ending. And, you know, the plates are going to fall, and the musical chairs, those that have a seat will have a seat, and those that don't will be in trouble.
Well, what are the signs you're really looking for? What are the market indicators you're looking for right now that are we already seeing them right now?
Of course, they're all there. This is what people, the point that was the original question that Ivan brought up is it 2008? Was it a single event? And no, it's not a single event. All the events are already occurring. There will be some banner blue ribbon moment where some big name goes bankrupt and people might attach it to it, or some particular war, what's the word, maybe breakout, or a new front on the Russia-Ukraine thing, that they will tag it and say, it's because of that. But the truth of the matter is the debt markets are busy failing. We've seen it. You've never had such an increase in rates from 0.33 right the way up to 3.5 on the 10-year treasury. Now, admittedly, it's pulled back. But what's amazing is during this pullback period, in fact, the dollar has continued to assert strength. So we pivoted from the better rates were being paid in dollar. Remember, the Japanese are paying 0.22 on their yen, and the yen had a 7 sigma collapse against the USD JPY because they're printing yen to keep this debt bubble up so that their pensioners don't go bust. To say, no, it's still worth what we say. We'll be the buyer. We'll keep buying and being the bid. So that's your yield curve control. It sounds like a fancy tool. It's just manipulation of a market. What actually should happen, simple laws of economics, is excessive supply means cheap price. I mean, if everybody's got a Bugatti Veyron, it ceases to be an interesting vehicle. And it's clearly very cheap and very affordable. Then it's a VW Beetle. It's a different kind of bug.
Do you think the next shoe to drop might be the European Central Bank? They seem to have this major issue where they've got massive inflation in the Eurozone, and they need to stop printing and buying their debt, buying the bonds, the European Central Bank. But they've got this problem where Greece, Italy, Spain, and Portugal are just basket cases. They've got way too much debt, and they almost can't survive if the European Central Bank stops buying their debt. But at the same time, they've got to stop printing in Europe because of the inflation problem. Are they even more trapped than we are in the United States?
Okay, so in your question, there's quite a bit of detail. So in terms of FX is the release valve for variations in indebtedness and price or yield paid on debt. So where people are manipulating, the currencies adjust for that. That's why the yen has collapsed, because of the yield curve control. The dollar has been more aggressive on rate hikes. That's why the euro is lagging. So when you talk about FX, there's also, broadly, for people that are not that FX literate, there's three categories. FX emergings, that can be the Brazilian real, South African rand, those kind of things, and the Turkish lira. Those are the Turkish lira, for example. We've been along the USD Turkish lira for the better part of 7 or 8 years. That's been collapsing for an extended period. So it was particularly weak. So the FX emergings are in trouble because of dollar dominance. Then you have the Asian that are Western friendly. So I'm talking about South Korea and Japan, not so much China. And note there's a difference with the Chinese and the Russians. So just to assert global dollar dominance is lazy, because the ruble is the best performer at the moment because it's commodity backed. It's come back from 156 to sub 53. That's an unbelievable performance, and that's got a separate bunch of room. So those are the categories. Then you look at majors that are not Asian Western friendly, like the Japanese yen and Korean won. Our favorites are the Korean won and the Japanese yen, and we've been jumping on those for an extended period. But the Eurozone is the other side of the seesaw in terms of the Western axis. So we are watching the euro collapse. Agent Orange, as I like to call her, Christine Lagarde, is totally incapable of managing this. And the fact that they know it's all over is why they appointed a lawyer who has actually already got a criminal record for fraud and not someone with any banking expertise. And I point out the Eurozone had 37.2% producer price index, 37.2%. That means your manufacturers, the cost of inputs for the things they make have gone up nearly 40%, not even a third, going on 40%. Now, how much do you think that they're going to have to charge to still have some degree of margins in terms of that market? So this notion that this inflation is over, it's being infuriated. Oil prices are remaining above $110. Gas prices are super high in Europe, even higher than the States. You don't move gas around easily for all these reasons. Plus, you've just eliminated your supplier of 80% to Germany particularly. And by the way, when you mentioned the pigs as being greatly over indebted, Germany is hugely indebted. The core of Europe, the maker of Mercedes-Benz. France is greatly indebted. Britain is also poor. It's outside of the EU, but are they all rotten? There's just some that have even less revenue attached to their debt, and they properly broken. So Greece is a massive problem. But Spain is 7 times bigger. Italy is twice Spain. So when you talk about the Italians are absolutely wrecked, and it's a huge piece. It's the third stool in the troika of Germany, France, Italy, the major players. So it is the euro has been terminally dead for a long, long time, but they've maintained it in a controlled environment. Now they are letting them all these things come to roost because they are ready. That means they're ready with their central bank tokens. And if you saw the Carstensen clip, the man I call who ate all the pies, he says the value of these things is that we can control where you spend things, what you buy it on. We can take tokens out. We can add them in. We have ultimate control. This is a power-hungry move, and they're ready to go the next to bring it in. And Voltaire said it best. Power corrupts. Absolutely, and absolutely. Well, I'm going to cock this up. I've already have. Power corrupts, and absolute power corrupts absolutely. So we are getting into the absolute moments. It's completely draconian and dystopian. You've got to be self-sovereign. How do you do that? Get physical when everyone else is being rammed digital. The banks are going to fail. Everything you have in there are probably going to be disappeared. You're going to get some form of crappy share in a bankrupt institution that'll end up fading away and being bought out. So there's a lot of homework for everybody watching this to do, and you've got to get physical. You've really got to keep the minimum in there.
We agree. Got to get some physical. Buy your silver and gold and just sit on it and wait for the next currency. That's what we're doing. But on that note, Francis, thank you very much for joining us today. We really appreciate it. And the link to your website will be in the description. We appreciate it.
Absolutely. If I can just give a short sign out, at the Market Sniper for Twitter, and the YouTube channel for the traditional markets, at the Crypto Sniper for both the YouTube and the Twitter. Thanks for having me on. And we'll see you guys around. We'll see how this plays out.
Okay.